Thank you. Our last speaker for this session is Matt Wilcox, who was most recently company executive director and chief operating officer. As managing director and CEO, in his previous role, he oversaw the construction and commissioning of the Abuja gold mine and played a big role in the mine's production ramp-up. Before joining Tietto in 2021, he worked as Chief Development Officer of West African Resources. Earlier in his career, he worked as Project Director of Nordgold and as a Senior Process Engineer at Amek Foster Wheeler. Shall we please welcome him to the stage?
Thanks very much. Thanks very much to the dignitaries in the audience, as well as the team at PayDirt, who's worked really hard to put on a conference year after year, and especially through the ravages of COVID. Thank you. Our standard disclaimers, you're welcome to read these at this time. I'm not going to go through them in detail. Okay, we're APG, which is Tietto Minerals. We are the newest West Africa's newest ASX listed gold producer. We've got our current guidance just reset this week to 75 to 85,000 ounces for this half. This after achieving our commercial production targets in July of 2023. Our mineral resources have grown during this year to 3.83 million ounces. Our current ore reserves undepleted are sitting at 1.45 million ounces, with our new reserve statement coming out towards the end of this month. Our exploration permits are over 1,170 square kilometres around the existing mine, and several more on top of that around the rest of the country and some in Liberia. We have a $25 million US debt facility. That's our only senior debt, and we paid down 6.25 million of that last month. We've got cash and bullion as of the end of last month of $43.8 million. And we're completely unhedged into what we should hope to be a very profitable half and a very profitable couple of years of production. That's our month-on-month progress. As you can see, those two dips there on the mining curve, they relate to the two peaks of our wet season. I guess there's two distinct wet seasons in Côte d'Ivoire, and you almost certainly always lose some mining production during that period. Our milling tonnes continue to impress, and we're pushing well over nameplate now. That's sitting at 4.8 million tonnes, mostly fresh ore. Gold production had a little bit of a dip, mostly due to our mining, but we're hoping that steps up again next month. That's our latest production schedule. It's less than 3% of overall inferred in the schedule. We've smoothed it out. We don't have any of the high-grade blocks forwarding that we previously saw in revisions of our schedule. We haven't finished our life of mine, so we've only put that to 2030, and it's 97% indicated or measured, with the remaining 3% being inferred. That's how we hope to achieve it in terms of milling throughput rates. We're confident we can get up to about 5.5 million tonnes per year on a blended basis with oxide and transition, and we're going to push through. Our grade's disappointed compared to what we were expecting, so we need to mill more tonnes. I think for all gold miners out there, they understand this, that if grade disappoints, you've got to smash tonnes through the mill. So that's what we're trying to do. That's the key metrics of our project. Tietto owns 88% of the APG project. We've got 2% in our local partners and 10% with the government of Côte d'Ivoire. They really are a good partner to have. They help us through pretty much all stages of the process, and we're very impressed, or I'm very impressed with the level of professionalism you see in the government, especially after spending sort of 15 to 20 years working in the rest of West Africa. I think Côte d'Ivoire really is the jewel that we're. Our current reserves at 1.45 million ounces. I can't So we've got a current life of mine production of 11 years. We're going to stretch out into some exploration targets next year, and we're hoping to extend that mine life well out beyond that rate. In terms of our fiscal conditions, it's been set by our mining convention. We're locked in at a 25% corporate tax rate. We pay a 5% royalty below $2,000 an ounce, which tops out at 6% royalty above $2,000 an ounce and doesn't get any higher. And also a 0.5% contribution to the Social and Economic Fund, which is primarily spent in our area to build schools, hospitals, and improve the overall livelihood of our community. That's our recap of our timeline over the last 24 months. It's been a very rapid mine development, much more rapid than most of the mines we're seeing around. We started with finishing a DFS less than 2 years ago now. We started with a placement which allowed us to nail down our long lead items. We poured first concrete in February of 2021. 2022. And we managed to pour gold in January of this year. So it's been a fantastic journey through the whole thing. There's been some ups and downs, but overall we're into production and into commercial production faster than a lot of mines will just about get off the ground. That's our pit development. I had to squeeze this in. I think you could fit the Eiffel Tower lying down in that pit at the moment. It's been developed for 8 years. That's 85% of our reserves in that pit you can see right there, and it gets deeper and larger as we progress through the thing. That's our process plant. Currently sort of doing an annualised rate of 4.8 million tonnes per annum on fresh ore, and we're hoping to improve some modest improvements to the crushing circuit to push that well over 5 and have a plant that's capable of delivering well over what our nameplate capacity was at 4.5 million tonnes per annum. That's our tailings dam, which is, as you can see, being extended to the back there. It sits on a laterite bed. It's a large sort of sustaining capital project that we're doing during this half, which I guess is adding to our overall cost basis, but it's necessary, and when that's done, the footprint of the dam will be finished, and it'll just be about lifting walls with primarily mining waste as we move forward. This is our next exciting sort of project coming up, which is our APG heap leach study. We're sort of hoping to turn about 75,000 to 100,000 reserve ounces into about 800,000 reserve ounces over the course of this year and early next year. I think we've started our column tests at ALS, you can see them there, and we've started the drilling campaign to convert the mostly inferred resource at APG into our indicated resource. Now we're hoping to have all that finished by the end of this year. Columns take upwards of 100 days, so it really depends on if we see anything deleterious or anything difficult in our columns, and we have to repeat tests to when it will be finished. But we are hoping to have the DFS out this year, or if not, early next year. That's our combined production profile. We haven't rescheduled it, and there's almost no inferred outside of our thing. So what you see in the dip in 2030 is where we're really seeing we're taking away from what we've currently got in our mine plan in APG and adding it, to the heap leach. So we have our life of mine plan out by the end of this month, hopefully in the next 2 weeks or so, and that should fill in the back tail of this project with primarily inferred pits that we're yet to drill out. That's our resource growth, and I can't take much credit for it, but it has been a very, very rapid resource growth from 700,000 odd ounces in 2018. Fast forward 6 years, and you're looking at 3.83 million ounces, with over 500,000 ounces in the measured category. So it's been a fantastic effort by the drilling team, primarily drilled with our own rigs, and we're hoping to put the rigs to work and continue expanding that resource base from next year. That's the main shear at APG. So you can see the density of drilling in the AG pit there. We've got APG about 10 kilometres, depending on where you measure it from, just down the road. We've already got water there. We've got power. We really think it's going to turn into a nice, big, wide disseminated pit, which we can safely heap leach at relatively low costs and add significantly to our reserve for relatively low capital costs. That's the near strike exploration at APG. The area you see in the centre of that diagram in the dark blue, that's our current mining permit, and you can see it sort of from the CIL process plant, it sort of extends 35 kilometres in either direction, and we're hoping to extend along strike and within truckable distance to increase our reserve base, over the next couple of years as we start to deplete our reserves. We've got a lot of targets to test, and a lot of just general recon to do in the area. We think we can continue to expand and replenish our reserves year on year for the foreseeable future. That's our regional permits. They're probably not that well marked, but we are, have got packages all over the place. Some of them not completely owned, some of them in joint ventures, but we're moving. We've been moving relatively quickly. Our focus has obviously been on APG, but next year we'll have budget to go out and further explore some of these packages and hopefully pick up some more exploration tenements along the way. Why Côte d'Ivoire? Côte d'Ivoire, West Africa seems to get all bundled into the same package, if you will, but Côte d'Ivoire is a wonderful country. It's got, for one, educated and talented people. It's got an extensive road network, highway network that's second to none anywhere in Africa, including South Africa. We've got a power network that's primarily hydropower, so green energy, if you will, which is running the mine now. It's a stable grid, reliable. We put our generators on an auto start and have been waiting to test the auto start facility for the last 4 months, and we haven't had a chance to test it yet. So the grid hasn't dropped out. So it is a stable grid, and we're hoping it stays as stable. Hopefully, given one chance to test our generators. It's got extensive greenstone belts all through the country, and we think we can continue to drill and hopefully add another project to Côte d'Ivoire over the next couple of years. That's our corporate structure. I won't dwell on it too long. It remains largely unchanged. We've got 2 large Chinese miners on our shareholder. They're very patient, great shareholders to have on board, and the majority of our register, apart from that, is sophisticated and retail, with very little institutional holdings on our register. We've got a very low market cap, we believe, at the moment. I think it picked up again today as a result of last Tuesday's announcement, but we're hoping as we start to deliver on some of the promises we've made through the project, we'll win back trust from the market, and we'll see that share price rise. That's our team at Tietto. We largely all come from Nordgold Base, which is a Russian miner that had 3 existing operations in West Africa, where we've all worked together. It's a team we trust. We all know each other well, and it's a team we can really build on going forward. It's our near-term catalyst. As I said, we've got our reserves coming out by the end of this quarter, which is this month. We've got the heap leach feasibility study, which we're aiming to have out in December, and we should be able to offer even more detailed guidance for next year by the end of the year as well. That's Tietto Minerals. I'm finishing a bit early, which is good because we're behind schedule, but that's where we're at. So I'll leave it to you.